Let's look at the accounting entries when it comes to hire purchase. The hire vendor is a creditor to the hire purchaser. The hire purchaser is the buyer. The hire vendor is the seller. So the seller demands the buyer to pay. So the seller is a creditor to the buyer and the buyer is a debtor to the seller. So they have a debtor-creditor relationship. So we have the accounting entries in the books of the hire purchaser, who is the buyer, and the accounting entries in the books of the hire vendor, who is the seller. Yeah, so these are the accounting entries that we have. When a down payment becomes due, you debit the asset account. Since you're buying the asset, you're paying for the asset, debit the asset account and then credit. You credit the hire vendor account. Then when goods are sold under hire purchase, you debit the hire purchaser's account, then you credit the seller's account. Then when down payment is made, you debit the hire vendor's account. Remember, the hire vendor's account, it's like a creditor's account. When a creditor's account is reducing, we debit. When it's increasing, we credit. So when a down payment is made, meaning the debt is reducing, we debit the hire vendor's account, we credit the cash account since cash is going out. Then when down payment is received, we debit. The seller is receiving money, so we debit the cash account. Then the debt that they're demanding is reducing, so we credit the hire purchaser's account. Then when the installment becomes due, we debit the asset account and also debit the interest account, but then we credit the hire vendor's account. It has become due, it is not yet paid. Yeah, then when the installment becomes due in the books of the hire vendor, we debit the hire purchaser's account and credit the interest account. Then when installment is made, we debit the hire vendor's account. Since what they're demanding is reducing, we debit the account and credit the cash account since cash is going out. Then when installment is received on this side, cash is coming in, so we debit the cash account and the debt is reducing that they're demanding from the buyer, so we credit the hire purchaser's account. Then when depreciation is charged, we debit the depreciation account. Since depreciation is an expense, it increases by debiting. Debit the depreciation account, but it's reducing on the value of the asset, so we credit the asset account. Then when depreciation is charged on this side, it doesn't affect the seller, so no entry is made. Then for transfer of interest and depreciation, we debit the profit and loss account, then credit the interest account and the depreciation account. So for the closing of interest account, we debit the interest account, then we credit the profit or loss account. Yeah, so those are the accounting entries when it comes to hire purchase, both in the books of the hire purchaser and in the books of the hire vendor. Thanks for watching. Do not forget to subscribe, like, comment, share with your friends. Let's catch up in my next video.